This is Daniela Cambone for Kitco News, and joining me now, E.B. Tucker, Director of Metallo Royalty and Streaming. He joins me from Florida. You're still in Florida, right, E.B.?
I am.
How are things down there, first and foremost, before we start this interview? Are you safe? Are you quarantined? Do you have food?
This is a safe place to be quarantined because you can sit out on your balcony and take a walk or ride a bike, and no one can really stop you. Florida is one of the better places to live in the country.
Well, I'm happy you're joining us today. You'd be happy to see that you're safe. A lot of people reached out saying they wanted to get your thoughts on the current state of affairs here on the gold and mining sector. We just closed out the first quarter, worst quarter in history for the Dow. Yet gold up about 4%. So it was one of the last remaining assets that you can seek refuge in. First and foremost, how do you feel gold is acting here?
I feel like it's great because what people sometimes don't remember is that in a bear market, you're not trying to get really rich. What you're trying to do is to lose less money than the other people involved in the market. So gold did that in the first quarter. I mean, of course, we shot up to 1,700, which was pretty exciting in early March, but we closed up for the month under extreme pessimistic circumstances, I would say, from most investors. I had people calling me saying, why is gold crashing? I said, maybe we're looking at different charts here, but it looks like it's doing great to me. It's doing exactly what we want it to do, which is to preserve wealth during a difficult time. And I'd like to point something out, Danielle. I think we're going into a time where you're going to have the haves and the have-nots. The haves are going to be people that have physical gold. The have-nots are going to be people that have paper gold traded in ETFs. I'm sure everyone has been talking to you about the difference between the price in New York and the price in London. About a week ago, it was $70, which what that says is that the people that have been arguing about manipulation in the gold market and talking about that for years are not as crazy as we once thought. There's maybe up to 100 ounces of paper gold trading for every real ounce of gold that's in New York vaults.
So have you changed your thought process on that? Because I know in the past you didn't really, I don't want to say buy into the manipulation theories, but has it changed your thought process?
Well, if you remember, what I would always say about manipulation is never complain about artificially low prices. Okay, so if someone, every time, got the guys I know that are prominent in the industry that would complain about this, I would say, look, you just buy some more gold. I mean, if somebody holds down the price of Mercedes S-Class sedans, no one complains. So with gold, all the gold bugs would complain, whereas I would just buy more physical ounces. Now I could potentially, be towards the end of my ounce buying, because that's now changing to the point where you're looking at $100, $200 premiums. And so I think that the manipulation was a great chance for people to get physical gold. I've been all over your website and looking, and there's just not much gold available, and you're having to pay up for it.
And I want to talk to you about that, but I guess it depends on your mind frame and how long you want to hold gold for. So for those people who wanted to buy gold and get out within a year, they don't want that suppressed price, right? Whereas you're
That's
holding
right.
long term, then like you said,
you're a trader,
you want to keep it lower because you want to keep buying.
If you're a trader, it's a different story. Okay, so let's address that for a minute. February 10th, my team and I put on futures trades on silver and gold because we thought the price was going to move, which it did. And during the period we held that trade, we had 4 times where the margin requirements were raised. So at the end of that trade, it cost 61% more for us to be in that trade. Now that's a paper gold trade. What that means is that we're trading a futures contract on the COMEX, which I don't recommend most people do. Now that's a trading move. So that's very different from talking about holding gold for the long term. Now, let me take off the trader hat and talk about what I would be telling someone in my family to do that's not involved in this market. You need to have some physical gold, and then you need to have royalty shares. The reason why royalty shares are important is because all the mining companies are now effectively shut down. There's a few that might still be open, but most of them are shut down. All the refineries are shut down. So that means the mining companies can't do anything to generate cash until this virus situation has resolved itself. Meanwhile, the royalty companies control hundreds of thousands, millions of ounces of gold in the ground, buried under trillions of pounds of quartz that no one can get to screw up. And that those companies have that future earning power that's locked in. It's the safest way I know how to store gold. So you have physical hold in your hand gold, and then you have your royalty shares. And if you want to trade gold separately, that's a different conversation.
Okay, so two points there. So first, you brought up premiums and how, first of all, it's getting hard to find silver coins, gold coins. So for someone entering as an investor here and wanting to buy gold and silver, physical gold and silver, where do you draw the line when it comes to premiums? I asked Peter Hug the same question, and I'd like to get your thought process on that, because at one point you need to get your return on investment back. So where do you draw that line?
For me personally, the line's been crossed. I mean, I looked at silver coins, $12 an ounce for silver on the exchange, and $10 premium. So I know a lot of coin dealers. I called them all. They were telling me, look, there is no coinage. You know, we might be able to get it in April. We're not even sure if we can get it until May. So for me, you know, paying that kind of premium is a place where I draw a line in the sand. Now, if I had no gold and I had no silver, I might reconsider that. I might dip my toe in the water. But I was buying the stuff back when there was, you know, no premium because no one wanted it. And I think the premiums will soften up a little bit because some of the dealers are telling me that people are showing up with gold they bought 7 or 8 years ago at $1,600, and now they can sell it. And so so I think natural supply and demand fundamentals are going to help this situation a little bit. But right now, when you have literally no gold available, I would say be a little cautious about that, because there's not much point in chasing something. I think the market still works. And, you know, let the market work a little bit and look at the royalty shares. Royalty shares are really cheap. Now, you might face a time when the royalty shares are expensive and the physical premiums come down. Okay, so you can play that game, and then you can switch over and play the other side of it another time. That's how I would look at this.
EB, on the mining side, and we're going to talk about mine closures in a second, but my first part of my question is, even with the gold rally, mining stocks were having a hard time catching up. They've just been decimated for a lot of them. Why is that happening?
Okay, so I am involved in one company to the extent that I help put it together, and I'm watching the stock every single day. In fact, it's right behind me, live, real time right now. And what I'm telling our bigger investors is we can see when people are having problems in their overall portfolio. So you have when the Dow is lurching 1,000 points either direction, you know, several days in a row, you have natural selling that comes up. So people are having selling across the board. The mining shares are not going to be exempt from that. So it's crazy to think that the Dow Jones can drop 30% top to bottom and mining shares be up, you know, substantially or even flat, to be honest with you, because you have this natural effect of pulling so many trillions of dollars of market value out of the market. Everything is going to get hurt. So it's really hard to find any stock that's going to get hurt. So the thing that's troubling about mining stocks is the lower oil prices do make them more profitable. The higher gold prices make them more profitable. The higher physical prices help them as well. But the closures are a big problem because it's kind of like if you have a business and you can't open it because the sheriff tells you you can't have a business open because it's not essential. Well, there's nothing you can do. I mean, you have these some of your bills still carry on, right? And so for the mining companies, a mine is very expensive to maintain, even on care and maintenance. It's very expensive to maintain a mine, and it's not the type of situation where you just turn it back on like a light switch. And that's why I think this is going to jumpstart the gold rally, is because the virus situation will calm down naturally. You know, the seasonal effect of people get more sick in the winter. You have all these things helping. You have work on vaccine. We know all these details. So this is going to calm down, and then people are going to realize, wait a second, you can't just turn the lights on in the mine and start digging again. This is a tremendous process to restart a mine. And so it's going to take time for gold to come back online. But Daniela, meanwhile, we've just authorized $2 trillion in government spending. Now, I don't know if you know this, but there's only $9.5 trillion worth of gold in the whole world. So we've just, with the stroke of a pen, created $2 trillion in new spending. There's talk of another $2 trillion coming online. And so I think people are kind of missing the big picture here is that this is a feeding frenzy for governments around the world. Meanwhile, it's throwing sand in the gears of GDP. And so you have ballooning deficits, lower GDP. This is exactly the type of situation where people panic into gold.
No, that's a very valid point, EB. And finally, let's just talk Metalla a second here. Also down 17% year to date, not as bad as the other guys on the boat there with you. But how are you, navigating this, EB?
So Metalla is in the business of buying royalties in the third-party market. What that means is we bought 46 gold and silver royalty interest from other people. We're not initiating these with the mining companies. So the goal of Metalla is to continue acquiring royalty interest in significant mines. This is not ABC Junior Mining Company. This is Pan American, Newmont, Goldcorp. This is these types of companies. Now, what you want to see is you want to see a company that's continuing to grow through a difficult time. And so what you should look for with Metalla is a company that in 40 months has bought 46 assets to carry on growing, because as an investor, you're getting exposure to those ounces, those proven ounces in the ground that are being mined and are going to be mined in the future at much higher prices by major companies.
You mentioned Pan American and Newmont. Those are two companies that shut down operations in Mexico. So how does that impact you directly?
Not just Mexico, Argentina as well. And frankly, internally, the calls that we've had, at the board level, we've expected, we'd be surprised if the whole world isn't shut down. I mean, you've got you put all the spots on the map together, and you have almost a total effective shutdown of mining operations. Because what company can, in good faith, send its people on airplanes to work their 2-week on shift? I mean, you just can't do it as a CEO. So probably most mining projects, unless they're completely self-contained, are in trouble. That stops cash flow. Anytime you have a mine closure, then obviously there's no metal being produced for a short period of time. Now there's concentrates. The concentrates sometimes are held in inventory. So every mine is different. Some mines process on site, some mines send off concentrate. Everything is different. But as a royalty owner, this is not such a big deal, because what you have is exposure to those proven ounces. We're not talking about hypothetical ounces. We're talking about measured and indicated, or sometimes even higher degree of certainty ounces in the ground. So you have exposure to these hundreds of thousands of ounces, millions of ounces in some cases, and that's locked into the ground. So if you don't produce it this quarter, you're not terribly concerned, because you've got decades of gold production that's there without spending a penny.
EB, it's always good speaking with you. You always bring fresh insights, and I appreciate that. Stay safe, and I hope I see you soon.
Thanks for having me.
And thank you for watching. We'll have much more for you on Kitco.com.